So as you may already know, my name is Theo. I scalp trade Solana futures. I've been doing it for a while now, and just over this weekend, I've been able to scalp 2 trades, which I want to get into today. So as you see, these are actually quite small. I mean, for what I usually post, but it's super important regardless. This is just what I took over the Chinese New Year period. This was on the 20th, and the trade I am interested in sharing today is going to be the other one, which is what I took just now, about 30 minutes ago. Bit of a small scalp, but a lot of people call me crazy for scalping Solana futures on such a low time frame, catching these dollar moves that I call them. And over the Chinese New Year period, I had the pleasure of people and friends asking me how exactly is it possible to scalp Solana. So I had some of my golf mates, and I also had a guy that I met at a Chinese New Year party who was doing NQ futures, and also asked how is that translatable to Solana. So the goal for today would be also to address those people. So if you're watching this, hello. But then also if you're new around here, then it should be relatively straightforward. And the goal of this video above all is to show you how you can do this too. Okay, let's start with the principles of how I trade. The principle of how I trade is I target what's called the dollar move. The dollar move is what I call the universal TP for Solana, which has a very high win rate because the average volume is usually more than a dollar move. And what I mean by a dollar move is, let's take the trade from the 20th, for example, which I'll highlight right here. So this trade I took kind of a breakout from the initial bullish trend. But what's really important is if you trade liquidity, you'll see that during this session, aka London to New York, we actually swept out Asia low. And that was the main area of liquidity. We saw a reaction, and really all I'm taking is just a small continuation of that reaction. So, which was a bit out of the ordinary, and I don't want to spend too much time on this because it's not very useful, but the point is that it's a dollar move. So I was targeting just a dollar, you can see here, going from 83.4 all the way to 84.4, very small distance, which means that it's very, very easy to hit. And now we will move on to the example I have today, because I think that's the most important. I won't spend that much time on this. The idea is to keep this video very concise, keep it under 10 minutes, and straight to the sauce of exactly how I was able to capitalize today. Okay, I want you to pay very close attention to what I just mentioned. What I just mentioned was a liquidity sweep. What do we have here that is even more golden than what we just saw on the 20th? Today, we have what I would call a turtle soup. Though, let's not get too complicated. The idea here is that we have something called PO3. I've explained this on my other videos. If you want to go back to those videos, I will link them in the top right corner. So one other core principle is the fact that usually when we have an expansion, the next session will then accumulate for then the next session to manipulate / distribute, which is exactly what we had today. We had something that's very, very A+, so let's go over it. Asia will often set the tone for the day. We'll have Asia create a range. In this case, we had London sort of fluctuate within that range. We had accumulation throughout London the entire day. And if you look at the overlay behind these candles, it's the hourly overlay. What do we have? We have this hourly low, we have this other wick, we have another wick here, and another wick here. What does that tell us? It means that below these lows are a lot of buy orders that were filled with equivalent stop losses, slightly below, usually below the lows. And in general, this whole area is what we call a area of interest, because this is somewhere that we can grab liquidity. So obviously in hindsight it looks very obvious, but just like I've highlighted in a lot of my previous videos, liquidity sweeps are the easiest to identify, especially when we have a clear range. So this is just another day. This is Wednesday, 18th of February. Just an example. The only time we distributed to the downside, which was here, was after we took out the range high. If you see all these highs, these wicks, all align into some kind of range. What do we get before that distribution? We get a sweep into that range, essentially collecting all the stop losses, collecting all that liquidity before distributing to the downside. And that is precisely what is happening today in our current example. So let's roll it back. Let's get ICT kill zones back on the chart. And let's play out the 10:30 opening to see if you can identify exactly when you should enter. Now, I will urge that we do have an SMT with the lows here, with London and Asia getting taken out on Bitcoin, which already sets the tone that you should already be looking for buys. Ideally, we have an SMT, means we have a liquidity sweep on a much larger token, aka Bitcoin, so we use this for correlation, just like how I'd use ES and NQ for day trading futures on NASDAQ. Which also, for a side note, you can see there's also an SMT here with this daily low, I presume. And you can see that NQ failed to sweep out that daily low, so we swept liquidity on ES. Shows that there's manipulation, there's a trap here, and then we actually ended up going up for longs. So very similar actually. NQ will move very closely to Solana, so if you're a futures trader that's doing fundeds, you will find crypto actually quite easy. So although we have this original SMT, the important thing that I always highlight to at least me and my students is I will always tell them, hey, listen, wait for the 10:30 open. I would only enter on a retracement of the new hour, because usually we'll get trapped. So you'll see initially we'll actually get a nice rejection down on the downside, all the way into this hour, you'll see that we actually tap into the 50% of the OTE level of this rejection wick on the hourly, this other rejection wick on the hourly. So this would be a really great opportunity. But once again, I would always wait for the 10:30 open, because on average, let's say on 100 days, this is the most consistent entry model that I have found that you can use versus trying to enter prematurely. I think a lot of people would have gone stopped out here. You'll see why in a moment, because below all these lows are stop losses. So what does price like to do? You'll see that within literally 2 candles, so 10 minutes of the open, just like on every New York Open, we always wick in the opposite direction where we're trying to go. I've said this in multiple videos. I will continue to say it until it's completely ingrained in your head. New York loves to manipulate in the opposite direction of where it plans to go, simply just to grab liquidity. In this case, we have an incredible liquidity sweep. This one is not very obvious because there's no actual level that we're sweeping, but you'll see that when we go down here, we are sweeping a very key level. We're sweeping London low and Asia low, collecting all that liquidity just in literally 5 minutes, and then just setting in the opposite direction. So if you've been trading for a while, you will see that this is a very classic move. This is what we call the New York reversal, where we actually sweep out 2 equal lows / an area of liquidity just to flip in the opposite direction. Do we take the trade here? Yes, if you're ballsy, you can do what we call a bottom tick, which I think on the longer term of 100 days of trading is going to be very hard for you to do. So what I would recommend is do exactly what I tried to do today. I'm not saying I'm perfect. I'm saying that this is what I found to be the most consistent. So my entry is precisely after this 5-minute candle closes above, creating an order block, is what we'll mark out here. I don't actually expect for price to actually continue down here and tap in this order block. There are plenty of examples, which I hope I will post, where price actually comes in here and taps into it. But the idea is that this area is very strong, and that even if we do come back down here, the odds of us re-sweeping this low right after forming it and creating order block is very low. Not to mention that on the 15-minute we also flipped, we created a wick, and the hourly has just gone down to create that bottom wick within the first 10 minutes, which is a key aspect that I look for when it comes to hourly trading as well. The idea is I want the hourly to look something like this eventually. So it's looking very strong, and we're very much likely to have this candle close bullish up here, which is why I would urge you to enter quite prematurely, even though that your stop loss might be quite high here, but this is a very high probability trade, especially when the liquidity sweep is this obvious. Essentially, the difference between entering down here is you don't actually have confirmation of this liquidity sweep, because price could just continue downwards and we're actually going bearish. But the important thing of waiting for this confirmation candle where we close above creating an order block, it shows that there's actually buy volume, and this was truly manipulation instead of just guesswork. So now that you have confirmation of that manipulation, you can easily, and this is quite a high entry actually, but you'll see you're still able to yield quite a lot from it because of the momentum. So obviously in this case, it's a bit different from all the other videos that I've posted. Usually you'd have your stop loss at the low over wick low. In this case, we're not having a tap into a fair value gap. We're actually just having an order block. So what you can do is I would usually recommend to always stick to the 50-cent stop. You'll see that 50-cent stop still is much further past this order block. So even if price comes down to retest, ideally you should be safe. If you're feeling a bit scared, you can always extend this to down here, but then I would recommend de-risking, ideally doing half of the normal position size that you're doing, and then obviously add as you're in profit. You'll see that there's actually multiple places you can add onto this position. Although I do not choose to, which I regrettably wish I did, but that is not why we're here. We're here to learn. I'm here to learn, and also for you to learn off my mistakes. So in the end, ideally your target, if we're respecting PO3, we are supposed to take out this area of liquidity and then just target opposing, which is not only London high, so this should be your TP1, just these highs, TP1 on London high, and your TP2 should be Asia high up here. You will see that price ends up trailing to there, and I'm recording this literally, an hour after this has happened, and you will see that price ends up retracing. Your stop loss is fine. This order block is just the last area for it to sweep if it decides to go down, because as you can see here, we have that 15-minute fair value gap right here. I don't know why it's blocking it, but you'll see above my cursor, there's that gap here. Just right here, we taps right into it just to send back straight up to take out the high again. And you'll see that price continues to trail up. And there are actually multiple instances where you can add to this position. You can see we tap into this 5-minute fair value gap here, which I will highlight. So if you're feeling ballsy and you are in profit, you got a low entry, for example, you can always just re-enter on this gap and double your position size, add your, bring your stop up to this low, because that's just putting it at break even. Simple habits that I think you should be very familiar with. And eventually you see that this trade ends up playing out within about 2 to 3 hours. We do get a pretty hefty retracement here, but I think eventually we do end up taking out that area of liquidity. So now we can exit the replay, and you'll see that price is still chilling around there. I personally closed, if you look at my P&L, I closed at $1 move, which is my principal. ideally because I don't want to be staying in a trade for more than 2 to 3 hours, because at around midnight, this is where the 4-hour candle opens. So we call it the 4-hour macro. 4-hour macro meaning the 4 hours, so this is the 15-hour, 4-hour. You'll see that every 4-hour candle has a top and bottom wick. So let's say you are taking a short here, but you're holding it through the 4-hour, you'll see that price tends to go back up by, in this case, $1. In general, it's just not great. There's a very good chance you'll get stopped out if your stops are very tight like mine. And yeah, I just don't try to hold past hours. In worst case scenario, I can always close this trade and then reopen it on the new hour if I'm feeling confident. But the idea is that we keep a 1 to 2 risk to reward ratio, which is why I talked about the 50-cent stop. And that's precisely the trade that I have on screen for you, showing exactly my entries and exit. And I purposely want to draw your attention to just the percentage gain of this trade, because whether it is the trade I took on Saturday or the trade I took today, the distance of volume that I'm targeting is $1. And the percentage gain is subject to whatever your position size is. 70% of $100 is $70. So if I'm putting 100 SOL, I'm making $70 on this trade. If I'm putting 1,000 SOL, I'm making $700 on this trade. This strategy is infinitely scalable. Whether you do it with 10,000 SOL or $1 million or do it with $70, the percentage is the same. Because I feel like the big misconception is that the barrier of entry for crypto Solana futures is extremely high, when in reality it's the exact same strategy, but it's just a different number that you're risking every time. So this is something that you can scale infinitely. It's not something that you have to get multiple accounts for or a copy trade. Really, it's just a numbers game. The more reps you put in, the more you can risk, the more confident you get, the more you can gain. And inversely, if you're not feeling very confident, you can de-risk. And I think that's the most important part, because the trade stays the same. And that will be it for me today. Hopefully this helps. If you have any questions regarding how to scale an account, for example, you can drop it in the comments, and hopefully I can answer them in my Discord, which I will have linked. And yeah, join up the calls, and I will see you then, and hopefully we can see more trades like this. This was a very good trade today, and yeah, wishing the best. See ya.